Optimism. On the 5th of August, we did an analysis, and today we're going to see how it's playing out. So, what we said on the 5th of August, if we just scroll down on YouTube, optimism. Should you remain optimistic, or is it the right time to start taking profits? So, we saw this particular wave pattern, and it says we're very likely to be hitting a local top, and we should anticipate, this is what this blue line is, some type of correction. So we're going to dive into a live chart right now and see how it's playing out. So let's get into optimism and see what's happening. So I've taken the data back to the 5th, right? To the 5th, and we're just going to unfold the data. I'm on TradingView, it lets you do this. So we're just going to see. So I had a movement to the downside, and we're literally over here, right? We're literally over here. So today what we're going to need to do is we're going to need to make a judgment call. Is this an A, B, C completion, or completion of an ABC? Or is it more likely that this is just the initial wave A down? We should anticipate a B and a C, right? By the way, I use something called Elliot Wave. It basically allows us to measure the human psychology of the buying and selling behavior. 5s and 3s is all we're looking at. 5s and 3s. Really, really powerful. And by the way, if you want access to this chart and my optimism analysis, we're going to do a bit of detail over here. You can now actually download the chart so you can view it. You can click on the description link below. It's in the link. Get your Gears live trading charts. We've just added optimism. So there's quite a few of them that you can put into your own trading view, but actually see the exact analysis that we're doing. So you got instant access so you can upload it into your own as well. So we're going to do a couple of things now with optimism, right? So it's pretty clear that this high has held as we anticipated on the 5th of August, where we anticipated this high. And how and why? Well, there was a couple of things. There was an Elliott Wave pattern structure, a 1, 2, 3, 4, 5. Most market moves in 5-wave trends, and then you'll tend to get a 3-wave correction, right? And it doesn't play out perfectly. We can only do probabilities and never certainties, but more often than not, this will play out. We also had a Fibonacci price zone. These horizontal lines over here, these are Fibonacci price zones. Basically, they're relationships that these waves have with one another. And when there's a cluster, that's what this green box represents, of pattern and price, that makes it a highly probable zone. We also looked at something called momentum indicators, and we had something called a bearish divergence. In other words, the momentum, there's thousands of momentum indicators, by the way. This is stochastics RSI. When you get the chart, you'll be able to get these settings as well. Bearish divergence basically means the price is making a high, like a higher high, but the momentum is moving down. So that tells us there's a disparity between the buying and selling behavior and the price movement and the momentum. And that's normally a sign of weakness, and you'll normally get a correction. And we have got a correction, right? A nice move to the downside. So what we're going to do today is focus on trying to deduce, is this the end of a correction, or should we anticipate a wave B and then a wave C? Now, we've got a bit of a challenge with optimism. It's not been out that long, so therefore there's not that much data. So we don't have weekly data, which is a bit of a problem. What I mean by that is, so when you click on the chart and you get access, you'll get the 4-screen view like this. So up here is my weekly. Over there is my daily. I'm in front of the 4-hour chart, and then over there is the 1-hour chart. So when we look at the top left-hand corner, the weekly, the problem is when I look at the momentum, there's no data. And that just means it hasn't been out for that long, right? In terms of price data, which is a problem. So what we're going to do now is I'm just going to get rid of all these. How should I do this? I'll leave it like this. I'm going to do it like this. What I want to show you is how do we go, right, Jigir, what's the edge? What's the probability of this being the completion of a correction, or is it just a wave A? And there's a couple of things I want to bring to your attention. First of all, we haven't hit the minimum price. Even though there's been quite a big move to the downside, it's gone from as high as, just call it $2.25, and as low as around $1.50, right? That's quite significant. It's like what, 25% thereabouts. And so it's a pretty big move to the downside. But the typical minimum correction normally hits 50%. And we want to go with probabilities. So that gives us a clue that this is likely to be a wave A, right? Likely to be a wave A, unless we get a big move to the downside. Also, most corrections finish beyond something called a 38.2% time retracement. And we can see this low over here is before this vertical line. So there's two factors straight away that tells us, I'm not sure if this is the end of a correction. We're likely to get a wave B and a wave C. And it's so important to know, and most amateur traders don't know this or they have a hard time getting their head around this, is there is no crystal ball of actually knowing what's going to happen next. The best we can do is stack the probabilities of what's likely to happen next and bet on that high probability outcome. Then you become the casino and we trade like a casino. In other words, get the edge and trade the edge. So what we're going to do now is going to go into a 60-minute chart. There's something I want to highlight in this 60-minute chart, right? Basically, this move to the downside. I normally do live weekend workshop for my private community. People that have bought some stuff from me or one of my courses or something. And what we were covering the other day was corrective waves versus impulsive wave structures. And what we want to look at over here, and there's a couple of ways we can look at this. But to me, this actually looks like an impulsive wave structure. We got a move down. We got this triangle forming called a wave 2 over here. There's a corrective structure over here. So we call this a wave 1, a wave 2. This is what it looks like. Then we've had this nice movement to the downside. It pretty much breaks down to 5 waves, sorry. So that looks like a wave 3. We've had another correction, which potentially looks like a wave 4. So we're probably going to see the price go below this low over here and finish off with a wave 5. So that means I would lean towards that the first move to the downside is just a wave A. And we should anticipate a wave B and a wave C. What would invalidate that is if this high gets exceeded. Right, so we're going to I'm doing a bit of detail here, detail analysis. This depends on if you're a trader and what you're doing with Optimism, what your plan is with Optimism. So what we're going to look at now is the momentum is bullish, right? That just tells us that the bias overall is sideways to up, right? So we should bang up. But it doesn't necessarily mean we should take long trades at this stage. What I would wait for, let me just now clean this all up. Because of this, these lines have served us. They no longer are required. What I would like to see, let me just clean this up as well. There we go. All right. What I would like to see is some type of movement to the upside, followed by one more leg to the downside that's quite convincing. And then that is likely to be the end of an A, B, C correction. So what should we anticipate? Actually, I'm going to go back to a 60-minute chart because I think you'll find this useful. Right. So with the 60-minute chart, if this holds, this might be the end of a wave A, but we're probably going to see the end of a wave A down here. And what we're going to do is, if I'm just going to hide this for a second. Let's just make it not visible on the hourly chart. We'll go back to a bar chart. All right, so what we're going to do is just something very, very, I say simple. It's simple once you've done it a few times. Like driving a car, right? Simple once you know how. So with wave Bs, right, I'm going to make just a basic piece of analysis. Again, it's a bit of detail, but I think you'll find it useful. Is most end of wave A's finish in a 5-wave structure, and a really powerful ratio is something called the external retracement, and the ratios are 1.618 to 1.272. Right, so this is a typical zone. So what we're going to do is just going to forecast a little bit. Just say, let's just assume this is going to end over here. What we will typically find with most markets, let's just go from here, is wave Bs are 50, 62 to 78.6%. And just like we did on the downside, we can do a bit of time retracement. Don't worry about this. Is quite high level, but I think you'll find it useful. I just want to give a bit of context on what and why we should anticipate. Probably a movement to the downside and then some type of correction. Normally in a 3-wave structure, and then we can consider, if you want you to, shorting positions. But what the real thing with Optimism is going to be, if it plays out like this, let's just say it plays out like this, right? And there's a few other things that we'll need to take into consideration. But let's say Optimism plays out exactly like this, right? And I'll just leave this on the daily chart. It's going to clean this up. Oh, there we go. Yeah, that's fine. That served its purpose as well. All right, let's just say Optimism plays out like this. What is the main thing to be paying attention to? Well, the biggest, strongest waves are wave threes. That is the trader's dream, to trade wave threes all day long. Some people call it different things, but it's wave three. So what is a wave three? All right, well, let's just look at this initial movement to the upside, right? There's three impulsive waves. There's this initial move up. Then we had some type of sideways movement called a correction. Then we had this next move up. Then we had some type of pullback, a correction. And then we had another move up. Okay, out of these three arrows, let's just change the color of them. Let's just change them to, let's change that amber for now, or orange. Let's call it orange. All right. Out of these three arrows, which one of the three is the biggest? The first one, the one in the middle, or the one at the end? Well, clearly you can see it's the one in the middle, right? That's the wave three. So wave threes tend to be the most impulsive wave, and you ideally want to identify the end of a wave two, because that's the beginning of a wave three. Get in the market and then drive up and let that market run for the wave three and take profits at the end of a wave three or at the end of a wave five. There's a few different factors. Why am I telling you this? All right, what most people don't realize is that the market just repeats these patterns time and time again, but on the next cycle, it's expanded, which means it's bigger. So what would I anticipate? And I'll tell you why I'm showing you this, because sometimes it's hard to be patient in markets if you're just starting out. But I tell you why it's powerful to be able to be patient is if this 5-wave structure on the upside, so we got this 1, 2, 3, 4, 5. In Elliott wave terms, there's always a wave degree higher and there's always a wave degree lower. In other words, there's macro waves and there's micro waves, and these waves just subdivide, right? So what I mean by that is this whole movement to the upside, the 5-wave movement, the count above is just a wave 1, right? The whole movement is a wave 1. This whole big A, B, C, if it plays out this way, we don't know if it's going to, it's just highly probable. If it plays out this way, is an A, B, C, but you always want to ask the question, an A, B, C of what? And it's typically a wave 2. What comes after 2? Well, just like this wave 2 here on the micro degree, what came next was a wave 3. So what do you think will happen on a macro degree count? Well, it's a wave 3. And the wave 3s tend to be an expanded version of wave 1. Expanded by how much? Most common and most typical, this is why it's so powerful, is 1.618. And often they will overextend. I'm forecasting here because we don't have the data yet, because it hasn't unfolded, where we're literally looking into the future as if we did have a crystal ball. So that's why I say this is probably the closest thing you're ever going to get to a crystal ball is Elliott Wave and Fibonacci, because it's very reliable, very reliable. You can see I've drawn some of these previously. So let's just keep updated with this one. It's these two ratios. So Optimism going towards $4 and then potentially even overextending into $5. And this will be the wave 3. So I'm bringing this to your attention because rather than trying to get some profits in these intermediate waves, this wave and then this wave and then this wave, which is okay to do if you're a very short-term trader, day trader, looking at 1-hour charts, 15-minute charts, 5-minute charts and everything else, you can zoom out and then just go, I just want to wait. And this applies to any crypto, right? It's not just Optimism, whether it's Ethereum, whether it's BNB, whether it's Solana. Wait patiently for a completion of an A, B, C. And if it does unfold like this, and we've got a few other factors like price, time, momentum, and pattern all unfolding, telling us, right, this is likely to be the end, then that's a great buying opportunity. So you want to be very aware of end of wave 5 for taking profits. And you want to be aware of the beginning. It depends on your trading strategy. But again, the beginning of wave 3s, which is the end of a wave 2. That is the trader's dream, to be able to just pick out wave 2s, drive it like this one over here. This is an A, B, C correction. Spot this and then there's a high probability that you'll be able to trade the wave 3. So Optimism did a lot of detail here, a lot of detail today, but it's playing out in a good way, because you'll find once the psychology becomes quite evident, then we can rely upon that information and then use it and give us an edge on the market so we can see things that others just can't see. And we're playing crypto tennis over here. It's a zero-sum game, which means for there to be winners, there needs to be losers. It's why 90% of people fail or lose at trading overall, because we're playing a sport. And like any sport, if you train and you got an edge against whether you got a better serve, you got a better backhand, forehand, whatever sport you're playing, you got a higher probability of beating the opponent. Here, you got millions of opponents. People are buying and selling all the time, betting on the market all the time, betting on the price. So if you got this edge, you can win. So what I want to finish on today is a quote from my book, and you can actually now download my book for free. It's in the description link below. You get some fantastic info from here. It's called The Extraordinary Venture Capital Opportunity, How to Invest Like a Pro. At the beginning of every chapter, I write a quote. In chapter 8, I got this quote. Really, really like it. I think it's relevant for today, which is from Henry Ford. He said, "It has been my observation that most people get ahead during the time that others waste." Right? So that's what he said. It's been my observation that most people get ahead during the time that others waste. So it's all about knowing to train, purposeful practice, right? Practice, put in the hours, put in the time, learn double time frame momentum, Elliott Wave, Fibonacci price, and all of those kind of things, because it'll just take you to a whole new level. So Optimism, what is it going to do next? We'll keep a close eye on it, but if you want the chart of it and the analysis, you can get it in the description link below. You can upload it into your own trading view and keep your own eye on it as well. And depending on what you're looking to do with your position, if you're waiting to buy, if you're looking to take profits, if you're looking to short the market, if it's available on whatever trading platform that you're using, then you just have an edge on the market, almost like a crystal ball, but we can only ever do, and it's also important, no matter how strong an edge is, we can only ever do high probabilities and never certainties. So make sure you're always using a stop loss. All right, guys, I'll see you soon.